From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Thursday afternoon. I'm Juliette Sarli. We are seeing a pretty flat momentum coming through on the market on the close. I think we're down around 5 points on the ASX 200. Let's see where the SIBO is. Pretty flat as well, actually up just a third of 1 point. Now, we have seen some buying, I should say, in the banks in the latter part of the afternoon's trade, but that's really been offset by weakness coming through from a number of companies that have given disappointing updates today. We can go through them one by one, or I can just give you a broad overview. But as Henry Jennings from Marcus Today told me earlier, do not disappoint. And investors seem to be pressing that sell button as soon as they see anything that even gives them a small red flag in terms of these quarterly trading updates. So we had Newmont overnight. We woke up and saw the weakness in Newmont's US shares. That's followed through into the Australian listed shares. We also had Fortescue, we had Northern Star, we had the bathroom plumbing company Reece, also Super Retail Group, which gave a bit of a cautious view on how the consumer is faring, particularly in New Zealand, which, as we know, is in a different stage of its economic cycle. And all of that just contributed to seeing a pretty flat line on the market. Had we not had those updates, could have been a much better day. Now, none the wiser, Mark Gardner made a very good point yesterday here on the COB that Kate McClymont, of course famous for going after Eddie Obeid, appears to have Richard White, the Wise CEO and founder, in her sights. And it seems like every day we wake up and we see yet another allegation against the billionaire founder and CEO of WiseTech. Shares now down by more than 20% since these allegations first started filtering through. And not loving it. This is actually quite a worrying story coming through out of the US with regards to McDonald's. Shares in Macca's actually fell by 5% in US trade at one point, hitting around $290 US a share. And this as we continue to see the fallout over the E. coli spread here. One person sadly has died. About 50 people have been very sick from this. McDonald's saying that the outbreak is limited only to its US states, and it has pulled the quarter pounder from its menu across a dozen of those states. But the US Centre for Disease Control, remember them, the CDC from the pandemic, we used to get daily updates. Well, they say they're fully expecting to see more cases. Now, previous E. coli outbreaks at big US fast food chains have caused consumers to shun those chains for months. McDonald's USA President Joe Erlinger saying that the fast food chain needs to rebuild trust, and analysts have flagged the outbreak as a potential black eye for McDonald's ahead of its earnings. We've seen previous outbreaks from the likes of Jack in the Box and Chipotle, both in the 90s, really affect their share prices for a number of months. So continue to watch that story. Let's get into the sectors on our market. We mentioned WiseTech, having a quick look at the tech space. WiseTech down by 6%, so below $100 a share. That is the first time it's below that level since August. Xero, NextDC, Tech One and Zip also lower. Having a look at the banks, CBA really ratcheted higher today, just under $144 there. Not enough, as I mentioned, to lift the overall market. And then having a quick look at gold as well. Coming off today, Newmont, of course, a disappointment. Regis, though, was looking good. And I had a really good chat about all the gold players and the outlook of gold with Jonathan Barrett from Celsius Pro, of course, on ausbiz.com.au. You can catch that interview. And he says, watch silver. All right, quick look again at some of the key stocks. Newmont down, and I think that might be the US listed shares there because, of course, we saw earlier the big move in the ASX one. Fortescue, though, of course, was a fall on its earnings result, and all of those stocks coming under pressure due to those quarterly updates. All right, let's get into everything now with our guest, Jimmy Jang from Macro Capital, who joins me now from Sydney. Jimmy, your thoughts on the overall market action?
Yeah, of course. I mean, as you kind of have already kind of given an overview of what kind of reporting that we've seen, obviously, today, and largely the ASX 200 company earnings are only kind of forecasted to grow by about 3% over the next year, which is, relatively modest if you think about it. And that growth is obviously being dragged by an 8% contraction in all the profits in the heavyweight resource sector as well. So obviously Newmont today was took a hit with the shares. That as you kind of already mentioned, that weaker performance, that US aftermarket trading for their stock, and also their quarterly earnings also fell short of the Wall Street expectation as well, which probably would be to trigger the sell-off as well. So the Reece obviously took a big hit today with their revenue falling about 5% to about 2.23 bill at the moment, and for the first quarter of 24 to 25, and that was compared to the last year. And their sales were stagnant, while the US division saw about 6.5% drop in sales as well. And Brambles, interesting is that they did report gains in their sales revenue for the September quarter, but they also issued a warning that their volumes have started to stall, and obviously as a result kind of pulled back with the share price to more than 2%. So, but good news on the flip side, Juliet, is probably the inflation in Australia. It seems to be easing down. So that trimmed min CPI that rose about 3.4% year over year in August. That's edging very close to what RBA's target range is, between 2 to 3%. And that rent inflation, which has been a sticking point, is obviously cooling. We saw the core logic data coming out indicating that the rental growth flatlined in the September quarter. Additionally, we saw the private sector job market also softening, which kind of with the wage pressures likely to remain contained as well. So given these trends, we kind of strongly expect the RBA to start cutting interest rates as early next year, around February, but that got pushed back to about May now. But we still believe the RBA should be cutting rates early as February or March at latest. With those combined anticipated tax cuts as well by the government should really boost the consumer confidence and the discretionary spending as well. So those are probably the sectors that we're really focusing on allocating ahead of obviously the US election as well at the moment.
Yeah, a lot happening in the bond market, as you say, just very much reacting to that. Let's get to where you're allocating, though, because there's a lot of concern out there. CEOs behaving badly, disappointing quarterly updates, the likes of that. But you're looking very closely at allocating in real estate here.
Yeah, I mean, like I said, with the inflation kind of cooling down at the moment, those mid to small cap retailers are particularly attractive at the moment. So while the sector has had a strong run over the past year, but these companies are more sensitive to interest rate cuts than the large cap companies like Wesfarmers, for example. But on top of that, what we don't want to get into these discretionary stocks directly and handle with the volatility in case that the rate cut doesn't occur earlier than the market is expected. So what we're buying is companies like Abacus, Storage King, and Region Group. So to start with Abacus, Storage King, for example, they're that leading self-storage brand in Australia. They have a market cap of around 1.73% and offers a pretty attractive growth yield of around 4.6% at the moment. But they operate across about 148 store and development sites, predominantly in Sydney, Melbourne, and Brisbane. And we see a really big potential with growth through the consolidation in this kind of fragmented market, driven by that trend such as the rising housing density, e-commerce, and especially with the AI as well, with a lot of data centers getting built around the country, and also the population growth, both between the interstate immigration and also international immigration at the moment. And on the other hand, we got the Region Group, which kind of owns that 92 convenience-based retail properties across Australia. So as I mentioned about the inflation, with these non-discretionary retailers like Woolies, Coles, and also in the discretionary sector as well, they make it a quite defensive play with that resilient cash flow. So when we are looking at some of these property groups, we want to understand the asset, which commercial properties are pretty volatile at the moment, with the economy potentially slowing down, and there's a talks between the recessionary environment. So we want strong tenants within this group properties. So those kind of non-discretionary sectors like Woolies is really good, strong tenants to kind of hold up along with that recessionary environment, and also their balance sheet is very well positioned for growth. So they've got around $262 million in available liquidity. So we like those names. We've been allocating slowly for the last couple of weeks, but we'll probably make some more aggressive allocation throughout the week.
And Jimmy, I just wanted to get your thoughts, perhaps broadly on some of these stocks that have been making headlines. When you look at the likes of WiseTech and Mineral Resources, it's two very different stories. There's the personal life of one founder. There's a potential tax evasion, very serious breach from another. Do you look at your allocations in companies like this and look longer term past who's running the company, or do you sort of say, look, I don't want to be in this right now?
Absolutely. I mean, those kind of managerial problems that companies face. I mean, quite frankly, we see that across the whole sector. It's just not just with WiseTech. It's just not with one particular company. We're going to continue to see this as we go. So I think what investors should really focus on at the moment is not really about these scandals that isn't even actually coming to a light right now. It should be really focusing on first of all, why we're buying these companies. We're buying it because of the outlook of the performance on these companies, and it's purely because of, let's say, with WiseTech, the actual technology behind it as well. So really, I think the investors should be taking the emotion out of, at least if you're a long-term trader or if you're a long-term investor with the outlook of 5 to 10 years. We want to really kind of have a valuation of these companies based on the actual performance of the earnings and also what the outlook look like. And if you base on that, when we see a WiseTech, pulling back to, let's say, 20%, that should be music to the ears of some of these investors that's focused on a long term, because we'll be able to buy it cheaper. So from our view, we'll definitely be buying some more.
All right, Jimmy, thank you so much. Always a pleasure. Jimmy Zhang there from Macro Capital with a look at his take there on the overall market. Now, of course, we were looking at some of those company stories and how they fared today, and the stock of the day was Newmont. We had Mark Gardner from MPC Markets, Josh Barker from RiverX join Andrew.
I think gold has historically played has been the transitionary money, basically, particularly when the sterling went to the US dollar way back when. So yeah, I think this will be, it's down 8% today. I'd probably be just letting it breathe for a day or two, and then somewhere around that, maybe that's $70 mark. I've got the US chart here, but the probably another 5 to 10% lower from here. I think you'd probably be safely buying the dip again because it has underperformed.
I think just the reason for the sell-off is a short-term heightened cost. I think it was over $1,600 an ounce all-in sustaining costs, whereas next quarter that's meant to be $1,475. So I think it's just a temporary dip. They're selling gold at over 2,500. If the current price hangs in there, that'll tick up to 2,700. So I think the overall trend is obviously with this one, it's doing quite well. I'd have it as a hold and I wouldn't be too concerned.
All right, let's have a look now at the market leaders and laggards. West African Resources doing well today. Telix Pharmaceuticals up 2%, flipping it over to the laggards, which I think there were more of. We mentioned the bathroom and plumbing company Reece falling after its quarterly update, along with Newmont, which we've gone into ad nauseum. WiseTech Global continuing to have a fallout there from its CEO's allegations against its CEO. Below $100 for the first time since August. Super Retail also came through with a disappointing update. Let's have a look at the winners in the small end of town. Good gain there from EML Payments, up by 10%. Flipping it over to the laggards, and I never know how to say that. Is it Worker? Anyway, it's up down 9.2%. And Weebit Nano. Now we are going to be speaking to the CEO of Weebit Nano, COB Hannock, tomorrow, 11 a.m. Here on ausbiz. He is in town and coming into our studios, so we can potentially get an update from the source as to why he thinks shares have been falling so much. All right, let's have a look at what we are seeing tonight. A couple of Fed speakers, including Beth Hammack, US unemployment claims, those weekly claims, some PMIs out of Europe, and industrial order expectations in the UK. Tomorrow, not a lot happening here locally, but you've got Japan October CPI, New Zealand ANZ October consumer confidence. Quarterly updates, though, I actually say not a lot happening, but there's still those quarterly updates. Newmont we had today, but mineral resources will be interesting given, of course, what we have seen with the outflow, the call, I should say, rather, about its CEO, ResMed. I do believe, although I can't see it in our calendar, that we are meant to be speaking to the CEO of ResMed as well. Anyway, AGMs too, Qantas, Judo Bank, Macmillan Shakespeare, Aussie Broadband, Adairs and Car Group. Waiting for my director to tell me if we do have ResMed booked for tomorrow. He'll know. Yes, we do. So we'll bring you that CEO interview as well. Flat finish there on the overall market and the ASX closing 9.7 points or 0.1% lower. 82.06 is where we sit. All right, so some big interviews tomorrow for you. We've got Mick Farrell from ResMed, we've got Kobe Hannock from Weebit Nano, and of course, continuing to follow all those quarterly updates. Do join us live from 9:45 a.m. Eastern.